All right, so here we are, ladies and gentlemen. I want to welcome you to BYOB Market Talks. As you are logging on, yes, please go ahead and continue to drop it in the chat. Go ahead and continue to drop it in the chat along with your affirmations. You definitely want to make sure that you do have your affirmations in there. You want to make sure that you are dropping all of that in the chat. I want to make sure that we get started this evening. If you are new to the BYOB, you're new to just trading with us, you're new, this is your first time on the call, let me get a 111 in the chat. You haven't joined us before, let me get a 111 in the chat. If you are learning, welcome, 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 welcome. If you are learning, if you are still learning how to cash out, let me get a 222. I know that's not a 222 from Gordon. Not all the cash 777s. I see you dropping in the chat. I've seen some 777s from you. You need to be like a 555, right? So, all right. So, well, but always a student, always a student, always a student. So, let's see here. Let me put this in here. Activate your audio. Okay. Did not mean to make that a private message. Hold on. We're going to get started. So if someone cannot hear, because I know everybody else can, want to activate your audio at the bottom of your electronic device. All right. So welcome, welcome, welcome once again. So let's talk about what the BYOB cash out is. So welcome to Market Talks once again. So actually the BYOB cash out is made up of three, and I see you higher vibration, all that Zara that you've been cashing out on. So I know who you guys are, right? I know who you are. So now what the BYOB cash out is actually is made up of three indicators, okay? And what we're gonna do tonight is we're gonna walk through the BYOB cash out as always. Make sure that everybody definitely understands what the BYOB cash out is, understands time frame confluence, and we're gonna show you guys how to use this, okay? We're gonna talk about this. I know on the calls we drop a lot in here, but you are the signal. You're the signal, and we want to talk about how you can maximize the tools, okay? Definitely want to talk about how you can maximize the tools. So let's talk about that tonight. So where do we begin? Where do we begin? BYOB cash out. Three indicators. You actually have your stochastic, okay? My stochastic is a leading indicator. So my stochastic is always first. So what that means is my stochastic, blue line crossing over the red in a downward momentum. See how my stochastic goes from 0 to, actually if I want to show you the numbers, it's going to go from 0 to 100. Now you notice you got this shaded part right there, okay? I got this shaded part. That's sitting right there. So you see this shaded part that's happening right there. So in between this shaded part is where you want your momentum to take place. So you really want that stochastic to come above to below. You kind of want it to touch the top and you want it to touch the bottom, okay? Now, when it hits this part, when it comes to this 80, I'm looking for it to get that curve on it. I'm looking for that curve. When it hits down here, I'm looking for that curve for it to turn around. I need that crossover. I really, really, really need that crossover, right? So when all of that happens, I got the blue line around this 80, I got that blue line that crosses over the red in a downward momentum. Okay, when it's around this 20, I got the blue line that crosses over the red in an upward momentum, okay? Very, very, very important. So doesn't matter. You're gonna see how this works tonight, right? Let me push play back on that. We're gonna see how we implement this. But at the same time, I really don't care what this says, okay? This says potential sell, potential, potential. What I'm looking for is my stochastic is going to tell me if I'm looking for a buy or if I'm looking for a sell at that moment. Then I'm actually coming over here and I'm looking at my candles. My candles, these are Hikanashi candles. These are trend candles, which means that when these form, I can take that buy or I can take that sell at that time. Let's actually look at our Japanese candles. Let's do a comparison for you really quickly. If I look at these candles, you can actually see these are Japanese candles now. Looking at my Japanese candles, you can kind of see why, I can see why we get the question a lot, you get that question, do I need to wait, or what's, how do I wait to enter the trade, or do I do it on the second or third candle, or what is it that I need to do? No. These are, these candles interpret for us. So they let us know where that trend is, what's happening, what's going on. They give us all that information. So when this candle has that flat top, that means it's good to go. It's ready. But we still want that added confirmation, and that's that PSAR. That PSAR is that reversal in the market. That PSAR gives us that reverse. So when this flips to the bottom, it flips to the top. That tells me that the market has reversed, okay? The market has actually reversed. So with all three of those, right, I now have all three of those. These are lagging, this is leading. So all three of these now that I have, I actually know that I can actually take this trade. Now, so let's look at this. Let's look at this trade lineup. So, and we're actually going to add something called a little time frame confluence to it, okay? A little time frame confluence. So here we got the stochastic, the blue line cross over the red, and a downward momentum. I got that blue line cross over the red and downward momentum. See, I got a red candle with a flat top, and I haven't even gone over this, just so you know. I just randomly grabbed the currency pair, right? So red candle with a flat top, and then I have my PSAR flip to the top. So now you know that I'm actually moving and I'm headed in a downward momentum. I'm headed for a sell. So let's check our 5 minute, because what is time frame confluence? That just means that what I'm looking for, I'm still looking for a sell, right? I'm looking for the market to be selling on that lower time frame. That's what I'm looking for. So I need the market to be selling. So I know my 5 minute is good. Because why does the 5 minute have to be selling? The 5 minute must be selling because it has to happen before the 15. You notice that all these time frames are lined up, 5, 15, 30 hour. So the 5 happens before the 15, and then the 30, so they happen in order. So with that, this happens first. Now I want to go to the hour. So when I actually go to the hour, what does the hour tell me? Where's my thing at? The hour tells me that the current swing of the market, right? We don't know if it's the trend yet because we haven't gone high enough for the trend. But the current swing of the market is in a sell. My swing of the market is in a sell, which means that I can grab my 10 pips and cash out. So I know that I can grab 10 pips and cash out with this trade. So if you would have entered this trade, right? If I'd have entered this trade, I'd have got my 10 pips and I'd have cashed out, okay? I definitely would have got my 10 pips and I would have cashed out. So right now, to where this trade actually was ready, to where it actually went down before we started getting all this pullback and everything else, to where it reached the bottom, it actually covered a total of 36 pips. So you take that into consideration. We were looking for 10 pips and cash out. This is not the time to get greedy. This is not the time to, oh, let me push it, right? Let me not do any of that, because one, you got your pip reaction time, okay? Two, because how long does it take you to get into a trade, your pip reaction time and everything else, okay? So you want to keep that in mind. Second, the other thing, let's look at what's the trend of the market. So, okay, now the trend of the market is in a sell. So knowing that the swing of the market, which is on the hour, the trend of the market is on the 4 hour. So we know that we are actually selling, but we actually just hit a support line. Now, do I need a support line to know how to sell it? I don't, but we're on a training call. So I'm taking you a step further. Okay, I'm taking you a step further. We just hit a support line. So knowing that we're actually sitting around a support line, okay, knowing this is where we are, you're starting to see where we're starting to get that curve. We're at the bottom of our stochastic. So what I really want to be trying to trade past this point you know, because normally we can keep going, right? When we see we got the trend of the market and the swing of the market, we can push for more. We would trade down to the next support line, but look where we are. We're actually down here toward the bottom of that. And do we even have another one? Let's see. What would our next one be? So what does this tell us? You see, we're at a major support. If you look at the date down here, look at the date down here where I'm at. Of course, I need my crosshairs. I'm at November 18th. So nothing, this has not pushed past that support line that it's sitting at since now we're at March 18th. So we're still looking for something to have broken that support line. Nothing has broken that support line since April of 2017. So what does that tell me? That it's probably not going to break that support line. The chances of it breaking that support line is not high. So we just happen to pick a trade that is probably not going to break that support line. So the chances of it breaking that support line, see, we were just talking about the BYOB cash out. Now we're going a little bit deeper. But the chances of it breaking that support line is really not that great. So it's probably, we're looking at this to turn around. So you might have a swing trade coming up to actually turn this around. This is not what we plan on trading on tonight, but hey, we got a trade. You know, so you're looking at the opportunity for this to turn around. And, you know, even if it's just to the bottom of the structure, right? That's 142 to the bottom of the structure. And then, because you see, it's like how many years has that been since this thing broke this structure? So this is a major support line. And so look where it's sitting at. It's already started. So the 15 is already, so you see it's tap down on the 15, it's tap dancing around. You see another 777. Yep. So I told you not a 222. So you look at this and look at how, you see how on the 15-minute is tap dancing around this support line. And I just randomly picked this currency pair to show y'all what the BYOB cash out is. So the 30-minute is starting to get its curve up. The hour is starting to curve, right? So now understand the market just doesn't come down here after that trend and just, oh, okay, let me turn around. So it might tap dance around here for a little while, right? It might hang out down here for a little while, but it's definitely going to turn. Let me not say definitely, because we had one last week with all the stuff with the fundamentals in the market with the coronavirus, and it actually broke the support. So we actually had our buy stop in there and everything else, and it just kind of was like, look, I'm gonna do my own thing. So the probability is low. Let me say it that way. The probability is low for it to break this support. This is a major support zone. So it has held this currency, and it has not dropped below this currency in a long time. So it has not dropped below this support in a long time. So the chances of this moving up is great. And so those are just some of the things that you want to look at. So we've gone from the BYOB cash out to a potential swing trade. So this is Euro CAD. Yeah, this is Euro CAD. And then, so we get that momentum on that hour and that 4 hour. And so we actually have a potential swing trade. So I'm gonna let this one sit right here. We'll come back and analyze it. And let's talk about, so before we go any further though, do we have any questions on the BYOB cash out? So we can get to the actual training for tonight. Any questions? All right, so let's talk. I'm gonna, like I say, oh, how did I know it's a pullback and not how do I know it's just a pullback and not a reversal? Okay, let's talk about that real quick. All right, so no, see, this is the difference between stocks and the difference between stocks and trading or investing and trading. The investing typically is like, okay, you're gonna buy and you hold and you have to pray it goes up. See, that's what society has really taught us, is that we buy, hold it, and just pray that it goes up. Okay, and so that's pretty much what society has taught us, right? Because that's what investing does. But we actually, now we just trade movement. This is what banks do. So that's why we're talking about be your own bank. That's what the BYOB movement is all about. So you actually, it's all about an entry point. There's always two people on each side of a transaction. So when you buy, somebody is selling. When you're selling, somebody is buying. So there's always two people on both sides of the transaction. So now let's answer this other question. You're welcome. So pullback, how do I know it's just a pullback and not a reversal? So if I'm looking at this, okay, if I'm looking at this and you see this moving down, right, and you see impulse correction, continuation correction. So like this right here would be a correction or a pullback, right? This would be a correction. This would be a correction. So let's put this in perspective real quick. And you see, this is that major support. So I'm gonna leave that one a different color. Or I'm gonna just come up here. So we're not even looking down there. So if I'm gonna draw, actually what I'm gonna do for you is I like to use the line chart. And I'm gonna I think the line chart is easier for instructional purposes and your eyesight when you're learning how to draw support and resistance lines. So what I'm gonna do is I'll just, on this hour chart, that's where I like to draw mine from. And I like the hour chart because the 15-minute chart, you're actually catching all the little dynamic support lines and all those little miniature support lines in there. And then on the 4-hour chart, you actually can miss some because you're starting to get into those higher time frames. So I'm not gonna like mark up all of them. I just kind of want to show you. Now, I like to call these like little checkpoints, right? You notice how the market is going to consistently hit the same area. These are where orders are being placed for the most part, right? The market is going to consistently hit those same areas. So if I am consistently hitting that same area, you notice that, and now these are like little zone areas wherever it hits it, okay? So now how do I know it's a pullback? How do I know when it's just a pullback and not a reversal? Now, let's put this into perspective, okay? Put it into perspective. Now, let's see here. I'm gonna change it from the line chart and I'm gonna put back my Hikanashi candles, okay? So, and I want you to pay attention to a few things as we're doing this. So notice that whenever you hit one of these, right, you notice that this is also can be your trend, right? The market goes up, the market always moves up, the market curves, and then the market goes down, right? So the market goes up, the trend is your friend, right? You got the trend that goes up, and then you have your reversal pattern that always sits at the top of a market, and then the market pulls down, right? So this is what we always have. Now, as we're coming down here, we're waiting on the market to make its reversal pattern. So let's just stay focused up here. So we got our uptrend, our reversal pattern, and then we have our downtrend. Now, with this right here, okay, with this right here, how do I know it's a correction and not a reversal? So anytime I get to one of these zones, anytime I get to this support or in resistance line, this is anytime I get there, you're going to, it's like the market. Think about, you get to a traffic light, right? You're at a traffic light, you get a little pause and it causes like that zigzag effect. So you're gonna hit that traffic light. You know, this is, remember, orders are being placed, things are happening there. So this is real life. It's like really something going on. And you're no longer the person that's in this transaction. You're now looking at the transactions, right? Because you're looking for a way to trade the movement, and you're not buying the currency. Now you're looking at a way, you're trading the movement of the currency now. So what you're looking for is a proper entry point. But what they're doing is they're actually participating in these orders. So just imagine that zigzag effect that happens when you're in traffic. Like, you see the light is green and you're sitting back there like, would you guys go? Could you go, please? But they're going, but you still get that like zigzag, like that, you know, we're going, but it's still, you still get like that pullback. You still get all of that. And so really that's kind of what it is. So you still got all that pullback and everything. So you hit that point where all that stuff is taking place, and you still got to kind of go through that cycle. So that's what that is. But then how do you know? Like when I'm looking at my stochastic, okay, I'm on my hour, but then I check my confluence. Like, let me circle this one for you. So let me circle, right? Because we're on the hour. And then if I come check where my confluence is, let me find it. So my confluence was, so what's happening right there? I'm still in that buy on my confluence. So that's why we check confluence. You know, that confluence kind of helps you understand what the market is doing on the big picture. So remember that factor of 4 to 6. So if I'm on a 15-minute chart, I'm checking the hour to check the swing of the market. If I'm on an hour, I'm checking a 4-hour. So that kind of helps you understand what's happening. And then of course, because remember, all this hadn't happened yet. So I mean, it's a valid question, because if you're looking at this, of course, you'd be like, how do you not know that's a correction, right? But if I'm looking at this, you're like, is that a correction? What is the market doing? Uh-oh, what just happened? I moved it too fast. You're looking at this like, is that a correction? What is the market doing? So, is that a reversal? Is it a pullback? What is the market doing? Because yes, you did get your blue line, that your green line that crossed, you got your blue line that crossed over the red, and you got your red candle with a flat top. Then I come here and you see I got confluence, but then it's like I wanna check my swing of the market and my trend of the market too. So you can kind of see what was happening, that this was in that uptrend. So if I'm on that 15-minute when I'm doing that, which is normally what we're trading from. So if I'm on that 15-minute when I'm doing that, right, which is normally what we're trading from, that's why we come check the hour. If I check the hour, that's the swing of the market, and the 4-hour, which is the trend of the market. That makes sense? And then you also, like for this one, like when we ended up training, like we're talking about something different, but like we got here. And so when we look down, oh, you're welcome. We look down and there was nothing below here. Because if I'm looking at where my stochastic is, right? So on the 15-minute, okay, I'm looking at where my stochastic is, because many of you guys right now would be like, oh, okay, I got my blue line cross over the red and the downward momentum. I got my red candle with a flat top. I'm waiting on the peace order flip. We're about to have a trade, right? Hey, look at Euro CAD. We're about to have a trade. We're about to have a trade. And then I jump to the hour and I'm like, oh, it's not confluent, right? It's a correction. It's not confluent, but I'm like, what's happening on the higher time frame? But then where's my stochastic on the hour and the 4-hour? My stochastic on the hour is beginning that curve up. So honestly, you waiting on that peace order flip to start that movement up. On my 4-hour, what's happening on my 4-hour? It looked like I'm getting that momentum to start shifting on my 4-hour. So, and then when you look down here and you see absolutely nothing, that's when I saw absolutely nothing here. There was absolutely nothing. That's why I said, well, hold on, wait a minute. When is the last time this has actually come down here? And so, I mean, this is December. So I'm like, being that this is December, there's been a major support. And so that's what made me start pushing more to the side, because it's like, okay, something should have been down here. So When we started pushing more to the side, I'm like, that, you know, that's what kind of shifted the training a little bit. Because we would have been talking about something else by now. But so that's why I'm like, okay, we actually have a potential swing trade, because this one has actually hit the bottom. And now that it's at the bottom, it should start curving up. You know, but just like this, okay, I want you to understand something, okay? The market does not turn around like a cruise ship. It's not just gonna smoothly turn around. So you're gonna get some sort of market structure. What is this? You're gonna get some sort of market structure. Anybody can tell me what this is? Anybody tell me what this is? Anybody? Anybody know market structure at all? There we go, head and shoulders. So, you know, you're going to get some sort of market structure. Anytime the market turns around, okay, you're gonna get something, whether it's just a range, whether, you know, yeah, you can trade it this hour. You can trade it any hour. It is the best reversal pattern. You are absolutely correct. Head and shoulders is the best reversal pattern out there. It is the most accurate reversal pattern out there. So probably one of the best ones to trade. So, but I'm gonna see you tomorrow. Higher vibration. So, you know, this is just, but I just want you to understand that. So yes, if you do get in a trade, you know, if you do get in a trade, I just want you to know that you're gonna catch, you know, if you jumped in now without knowing what type of reversal pattern it's gonna be, you know, the ride might be a little bumpy. I just want you to understand that the ride might be a little bumpy because you don't know. So just like this one, you know, it went up and then it came down, but then it pulled back up and it came down. So just understand that. And so to answer your question, could you trade it this hour? Absolutely. It's just understanding the type of trader that you are. So the market opens Sunday. Now, of course, I'm talking Eastern Standard Time because we have people on here from around the world. But, you know, the market opens at 5, you know, what is it, 5 and 6, depending on what you're looking to trade. The market opens at 5 and then it doesn't close till Friday at 4 or 5 o'clock. Like I say, based on what PM, based on what you're trading. So you can trade whatever. So if I'm a swing trader, for example, I'm really not concerned about that big gap of spreads, because like, let's say during the you know, the UTC time, when the day trades off, which is of course at 6 p.m. our time, based on what you're trading, you know, because gold and things like that, they hit at a different time. So that spread that opens up, that's really, really wide during, you know, that 6, 7 o'clock hour for certain currency pairs, when that day switches over, you know, if I'm a swing trader, I don't care about that. You know, I just know that comes with a swap fee. I know that it comes with a higher spread. I know that that's what's going to happen. But if I'm a scalper, where if I'm only looking for 2 or 3 pips or 10 pips and cash out, if I'm only looking for a few pips and I get out, then I know that's not a time I'm jumping in the market. So like right now, if I'm an intraday, if I'm looking for 50 pips or something, then I'm gonna set my phone down. I'm gonna grab some pips and I'm gonna let my phone ride. I'm going to sleep. It doesn't matter to me. Swing trading, it doesn't matter to me. But like right now, I know that at 10:30, 11:30 Eastern Standard Time, I know the market starts slowing down and you get consolidation overnight until the market opens with the London session. So I know that. So that's not a good time to scalp. But if I'm a swing trader, it doesn't bother me because I know that I will ride all of that out in this swing trade. So it doesn't matter. Or if I'm or if I'm an intraday trader, then I'm okay with riding it out during certain times. So you can trade whenever you want to. It's just what type of trader are you? You know, and you just have to understand when is the liquidity in the market. So do you want to get up and trade at 3 o'clock in the morning? you know, get up and trade at 3 o'clock in the morning and be done with it for the day. So who is that post? Somebody posted today that they made more today than they did on their job. So it's just what type, and they were scalping. So it's just, what type of trader are you? So what's your personality? So I love this. I love this. So let's talk about what we're supposed to be talking about tonight. But obviously just what we're supposed to be talking about, because we diverted a little bit. But do we have any questions, any more questions before we go? I want to make sure I get your questions answered. No more questions? All right. Like I said, I'm gonna leave that up there. Okay. That is the BYOB. So, and ladies and gentlemen, that's the BYOB cash out, right? Haha. So let's talk about this Euro AUD. So, haha. Now you guys are welcome. You guys are so welcome. So let's talk about this. So I might leave those euros alone, right? Everything, all the information, it all happens for a reason. So that was good. So I don't really know if I want the 5 minutes though. So it just depends. So like, let's say I'm gonna take the 5 minutes off. We'll come back to the 5 minutes. So okay, this says potential sale. Let's take this. I was hoping we had a 15-minute, but that one was an hour some change. Let's see. Or let's see. So this says a potential sale, right? And they're gonna give us actually, I'm gonna pause this. You can pause this to keep it from updating, okay? So we're gonna help you understand the value behind the tool and how this can help you, because I know I get a lot. Well, I was trying to use the Vibrata and it gave me this, or it told me this, or it said it was a sale, but it's a buy, or you know, and vice versa, in different things. So let's talk about this. And I'm glad this first one is Euro AUD, because I actually saw this one. It called it again. You look, it called it right here, 61516. It called it at 61. It called it more than once. So this one 34 minutes ago, it called it 34 minutes right here. I saw it. It called it 2 hours ago. Let's drop this one. This one 2 hours ago, it called it at 61331. And that's actually on the 15-minute chart. So this one's on the hour. This one's on the 15-minute chart. I might not put them both on there, but they're all calling it for a sale, right? Once again, on the 15-minute chart, look at it, 61387. The point is, it's called it a few times, okay? So within this range, so before, and I'm just trying to show you, it's called it quite a few times, but I don't want to mix up, because one was an hour, two of them were on a 15-minute chart. Now, it's called it for a sale. Let me see. It's called, so let's look at the one that's on the hour, 61516. Which one is this one? 61516. I'm gonna change the color for the one that's on the hour. So now, so these are called on the 15-minute. Let's go to the 15-minute. So you can kind of see where the time was. So it called for a potential sale, okay? And those were a while ago. Now, when it called for a potential sale, my stochastic was actually at the 15, okay? It was actually at the 15. So if I use my confluence, okay? So basically, you notice, where is it sitting? Anybody, where is it sitting? It's sitting at a support and resistance line. Okay, so this call price, now if you understand what the Vibrata does, the Vibrata sends out high probability. This gives you those entry triggers. So it scans the market for those entry triggers, okay? And what it's doing is sometimes, more likely than not, it's calling this in a correction, okay? It's not calling it, it's giving you time for the setup. So it's not calling a trade when it's ready, like right then. So you don't have reaction time. So it's a high probability setup. So if I'm looking at this setup, you see that it's actually called where, look at where this is. So it was called at, let me find this 15-minute again. You look at where this was, it was probably called right here. I can guarantee it. UTC time 30. What I tell you right here? I told you. UTC time 30. Right there, okay? Keep your phones muted, please. So UTC time 30. So this is, I was trying to get a different color. So UTC time is 30 is when this was called. So you notice that my blue line crossed over the red and upward momentum, and you see how this is right there. I mean, it's a perfect setup for a buy. But if I use my confluence, right there, where am I at? That is actually a correction. That was a correction for what is happening, because what's happening right here, my swing of the market at that time was a buy, but my swing of the market right now is in a sell. If I look on my higher time frame, my trend of the market is actually in a sell. So it's not that this is inaccurate. This is giving you more or less where the trend of the market is going, right? Potential sell, for the most part, potential sell. So this is what it's giving you. It caught it again. Now, if I look at where this is at, what did we talk about the other day when we talked about ranges, okay? We talk about these ranges that these things come in. So if I look on this side, remember that my support and resistance line is not, a line per se. It's all in this little range. It's got these little zones that it's in. So yours might be here, in all seriousness, yours might be here, mine might be right here, So you might put yours here, I might put mine right here. So it's not that, mine is wrong, yours is wrong. It's really in that zone. So what happened is, this is a correction. So this is accurate when it says potential sell. It's just the fact that you see this was a correction in the market. Now you actually have time. Do you want to take it? So the trend is your friend. Is it best to trade with the trend? Absolutely. But so now but now we still could have grabbed some pips. See, with the cash out, you can turn around. That was a 22 pip opportunity. So understand, I don't want to tell you to trade against the trend. I'm not telling you that. What I'm telling you is that you have the opportunity to do so. Now, you have to make the decision if you want to. What is your pip reaction time? This is where this is important and critical, okay? Your pip reaction time is so important, okay? Your pip reaction time is so important, because if you have a 10 pip reaction time, meaning from the time you see the trend, from the trade, the time it take you to get your phone, the time it take you to get the currency pair, the time it take you to hit market execution, if that's 2 pips or 3 pips, hey, you're great. But if it's 10 pips, you might not want to trade against the trend. You might want to wait for the correction. The only time you will act, or you might want to go for less pips. You might just want to be a 5 pip person when you're doing that, or you might not want to do it at all. So this is where you have to make that decision. That, guess what? Unless we're talking about GBP, right? Because GBP will give you 50 pips. And so you get spoiled trading a GBP, and, oh, okay, with GBP, I did 30 pips, so you think you're good. And then you come trade something else, and you wonder why you didn't hit your take profit. So just food for thought, okay? Just some food for thought. Because GBP has so much liquidity that it's like, I'm good, I'm getting so much pips with GBP, then I come trade something else, and then you think you have a problem with you doing something wrong. You're not doing anything wrong. You just got spoiled with GBP. And you can make money with these other currency pairs. You just have to understand what you're doing. And when you listen to what the market is telling you, you understand. Use the tools. Understand how the tools work. You really got to understand how the tools work. The tools do the heavy lifting for you. So if you have the tool, let it lift, right? Let it do the lifting for you. So that's what it's there for. So now, and then this one is the hour. So we just got this one, and we literally just missed some money. Like, we could have made some money tonight. So the stochastic flipped, blue line crossed over the red, and then the red line, we got the red candle with a flat top, and then the peace hour flip. So we got diverted, and that actually to that support line was 17, but it actually went down. So let me go to my hour, right? Because this one got called on the hour, actually like 34 minutes ago. So around when the time to call hit, this one. So that means that around here is where it got called. So if I check my 4 hour, we wouldn't have traded that on the hour. We wouldn't have. So because look at it, right? This was a continuation. So basically, why did this get called on the hour? This got called on the hour because this was in a nice downtrend. It had a correction, and then it flipped back around. So that's why this got called on the hour. So you see what the Vibrata does for you? And then if I check my 4 hour though, my 4 hour just had a peace hour flip. So that's what this is doing for you. And so going to the 15-minute chart though, you can actually look at all the time frames. Going to the 15-minute, actually let me put this back over the hour where this got called. So if I go to the 15-minute time frame, you can actually see that, oh, we could have traded this on the 15-minute though. So we could have analyzed this from a 15-minute time frame, and we could have traded this on the 15-minute. And if we would have traded it on the 15-minute when it was ready, we still could have got our 10 pips out of this. So even though it was called on the hour, we could have analyzed it, because we can use the 15-minute for a tighter entry, because there's no way it didn't meet any criteria. But when we noticed that, look at how this was in a nice downtrend. This was a correction. The Vibrata called this on the hour because the trend flipped, the swing trend, let me not say trend, the swing flipped back to a sell. We had a correction and a buy. The swings flipped back to a sell, went back down to the 15, right? And you can use the 15 for a tighter entry. That's why we could have traded it off the 15. That makes sense? You guys with me? Okay, great. All right, I just want to make sure you're with me. So, because the 15 from the hour, the 15 is a tighter entry. So that's why, because there's no way we would have traded this from the hour. Absolutely no way. It didn't meet any criteria. You said the 15 candle was blue on the hour? No, this is the hour. Look at this. This is when this got called. This just got called 34 minutes ago. So this is this hour candle we're in right now. That's why if I move this, would that help? If I use an arrow, would that help? So I put that line on top of it or make it thinner. You say your pip reaction is slow unless it's a GBP or exotic. That's because they have so much liquidity. So this was called, so what happened is the Vibrata did a potential sale on Euro AUD on the hour, okay? They recognized the entry trigger at 1.61516, right? That's this one, okay? You with me? I'm gonna delete this and use an arrow. So that's where they called it, okay? So this is the call price. This the price lined up here. So I just dropped the line at their call price. Now, You notice that their call price is nothing more than a support and resistance line, right? Nothing more than a support and resistance line. If I look. So at that support and resistance line, there was an entry trigger. There was a trigger, okay? There was a trigger. So it's absolutely no way we would have entered this on the hour. But what made it trigger? What made it trigger? You see this was in a nice downtrend, right? Here you have a correction on the hour. There was a correction to a buy. It's flipping back around to a sell. This swing flips back around to a sell. I still cannot trade this off the hour because the time frame I trade off of for my BYOB cash out has to have the stochastic for a sell. My stochastic has to have the blue line cross over the red around the 80. I have to have a red candle with a flat top and a PSR flip. The only thing I have is a red candle, which gives me swing of the market. So this looks like what? This looks like when we're using our time frame confluence, correct? It does not look like what I would trade. It looks like confluence. So let's drop down for my 15. I can trade this on the 15. Remember, it was a trigger for the 15 I can trade it off of. So if I'm analyzing this from the 15, see, this is the candle that began that hour where it triggered. However, I can't use that candle, but now I got a stochastic. I got a blue line that crossed over the red in a downward momentum. I got a red candle with a flat top, and I got a PSR flip. Make sense? So I can trade this off the 15, which means that I'm doing 10 pips in cash out. I'm not looking for a long trade. So if I jump down to the 5, what's my 5 doing? Let's do our time frame confluence. My 5 is selling. My hour, where the trigger was, my hour has that look like it's in the swing of the market, is in a sell, right? That's what my hour looks like. So I can trade it from the 15, but I can't trade it from the hour. So the only thing we did is what the Vibrata gave us is it gave us a potential sell. See how it says potential sell? It gave us a potential sell. That's what it did. So, and if I check my swing of the market, my trend of the market, which is my 4 hour, you look at this. My stochastic still has room to come down. So how far is it gonna go? We don't know, but I wouldn't push it. I really wouldn't push it. Because remember, we just looked at another euro pair, so I really wouldn't push it. Because remember, they kind of flow together. That's that base currency. But it's all about what they're paired with as far as where it's gonna go as a whole. But you know, it might push a little bit down there. So I really wouldn't be trying to get more than my 10 pips. You know, I really wouldn't be pushing it too hard if we were actually in this trade. Ask your questions. I feel a question. Somebody has one. Y'all got me sounding like Dr. Bythewood. I feel the energy. I feel the question. Yes, you can. Matter of fact, I don't want to move that. You see this ride right here? Cashed out. I love it. So this has been, yeah, this is Bitcoin right here. So this was the drop from Saturday. Yeah, what was that, Saturday it dropped? I think it was Saturday. This was the drop Saturday. And so you can kind of see where this trend ended and you had this market reversal. It looks the same, right? So, and now you can see where it just rolls back up. No, you don't, if you have a call from an hour, no, while we did that, you can actually look at it. So why do we do that? So, well, let me finish this question first and I'll go back to that real quick. I said, did somebody have a question? Y'all didn't ask, and now you asking 3 of y'all at the same time. So, and then somebody making money on the training call. I'm not mad at you though. Cashed out. So, now this is crypto. You see how it's the same thing. Blue line cross over the red, right? Red candle with a flat top. So, and then you got your PSR flip. So it's the exact same thing, right? It's the exact same thing. So what I will tell you with crypto though, crypto moving impulses. So if you've traded Bitcoin before, or you traded this before, I will tell you to make sure that you mark up your support and resistance lines. I cannot stress that enough. Make sure you mark it up. So do not trade crypto until you know support and resistance. Don't touch it till you know support and resistance. Well, I can't tell you what to do. I can highly recommend that you understand support and resistance, just like I tell you with gold. So it's just something you want to understand. You see, crypto does a lot of this, you know. Let me go to the 15 and kind of show you. So crypto will do a lot of that sideways motion, and then it'll go. So it'll do a lot of that, and then it'll just surge. You see that surge? You see, it'll have a lot of that sideways motion, and then it'll surge. So I did not mean to move that line, but you see the surge? So it's like, so the crypto does that a lot. But is it following the cash out? Is it following it? I mean, it's all lined up. Even that surge that happened Saturday, this is Saturday right here. This is Saturday, okay? And this was a lot of money. So you look at this one, this was beautiful, right? Blue line cross over the red candle flat top, PSR flip to the top. When it got ready, I told you I accidentally moved that line, but when it got ready, it just surged. And when I tell you it just was a nice drop, it just surged. And then it goes sideways and then it just come on up. So it just, and so it's nice and smooth. The Hikinashi candles make crypto look so much better, because look at Japanese candles with crypto. I would not be trying to touch crypto with the Japanese candles. So, but I like the way that it moves, and it's like, you can kind of see, look like blue line cross over the top, blue line cross over the red. You got a green candle, flat bottom. What are we waiting on? A PSR flip, right? So same thing. That's what it's doing right now. So yes, you can definitely trade it. And going back to, I had a question. So if I'm looking, okay, so if you get a call, oh, you're welcome. If you get a call on the hour, you must go see the 15 chart to enter. No, I mean, no, you don't have to, but understand that even if you're trading on the hour, right, without the call, you know, if you see something lining up on the hour without the call, you can use the 15 for a tighter entry. So even if we always teach from the 15, but if you're trading from the hour, you can use the 15 for a tighter entry. So what we just did is use the 15, you know, because if I'm using that for a tighter entry, or I can go trade on the 15. So if there's a trigger here, there was an entry trigger, there was a trigger, there was something that said, hey, you know, the Vibrata saw something at this support line, support and resistance line, right? There was something that happened at this resistance line. There was something that happened there. So if there was something that it triggered there, why not check every time frame to see if you have a valid trade? That's pretty much all I did. I just checked all the time frames. So let me see. I'm looking at the time, so I'm gonna try to answer these last two questions. So if I look on a higher time frame and it hits all three on the list, is it probable for 15 or 5 to get 10 to 20 pips? If you want more than 10 pips and you've checked the hour and the 4 hour and they're both going with the swing of the market and the trend of the market, like how this is going in the same direction, you need to understand where your support and resistance lines are. So we've trained on that in the past, so you probably have to go back and rewatch one of those videos. But if you want more than 10 pips, you have to understand where your support and resistance lines are, because the market always trades to structure. So it's going to trade to support and resistance. And so you really need to know where those, you notice how when we drew those up, the market is going to stop and pause at one of those lines. So you'll never just be able to randomly throw a number out there like, oh, it's going to be a 30 pip trade. It's never a 22 pip trade. Your take profits are always at support and resistance lines. So you really want to know where those are. When a candle pushes past the PSR causing it to flip and a reversal happens, do we enter the same candle that caused it to flip? You enter that same candle as long as everything lines up. Yes, you enter that same candle. As long as you got that flat top. Long as you got that flat top. And we actually did cover that. So when this is posted, you can actually go back and watch the recording more than likely, because we did cover that when we went over the strategy at the beginning of this call, if you weren't on there. So, but ladies and gentlemen, that is all the time we have for questions. I greatly appreciate you. But sit fast, grab